Hey everybody, Travels with Dottie here, and yes, I'm inside the little house, just only for a few more days because I'm going to be headed to Eagle Nest this coming Sunday, just about 5 days from now. And I'll be coming to you from that beautiful mountainous little town in northern New Mexico. Today, what I want to talk about is I've gotten more than a few comments about people expressing some confusion over Social Security and Medicare. And I can understand why, because the topic of both is very complex. And when you're at the age where you're going to be participating in both those programs, it's really important to be fully informed. And I'm not going to fully inform you on this video at all. I'm going to give you a brief, basic overview so you can get what it's about, but you do need to do either your own research or get a trusted financial advisor or someone that really knows. A lot of states have free services where they can give you professional, unbiased advice on both Social Security and Medicare. And I urge you to leverage those resources for the detailed information, because there are going to be differences and nuances that apply to your special situation. But I'm going to be talking in very general terms so you can understand sort of the gist of how these two programs work. Pardon me. The first one I'm going to talk about is Social Security. And Social Security is you theoretically, as you work throughout your life, you've heard of FICA tax, FICA, and that is you paying into the Social Security trust fund throughout your life. So when you retire, you can get the benefit of that monthly payment for your lifetime. So how does that work? You have, right out of the box, you have options. They have a thing called full retirement age. And for the vast majority out there, it's going to be 67 years old. And you will get your full retirement benefits when you turn 67. And it's easy to apply for. You can apply for it several months in advance. You can do it online. And it's deliberately a very simple process to do so. Now, there are other options. You can take early Social Security as early as 62. Anytime between 62 and 67, you can take an early retirement. Why wouldn't you want to do that? I'll tell you why. One, it's a lot less. We're going to use the average full retirement benefit for the average citizen is right now it's $1,900. So if you're Joe average or Jane average, you are going at age 67 at full retirement, you will receive $1,900 per month. And every year that is adjusted for cost of living. And it's anywhere from sometimes zero. I've seen it since I've been doing it as high as a little over 3%. It depends on the rate of inflation. But when you start at 67, it'll be $1,900 approximately. Now, that number is going to go up. If you're 57 and you wait 10 years, it's not going to be 1,900. That's going to be adjusted every year. But let's not go into those nuances. You see how it gets complicated? So let's just say your retirement's $1,900 a month. Boom, 67. What if I retire at 62? There are a couple of things. One, you're going to get less money. How much less money? Instead of $1,900, you're going to get approximately $1,330. That's almost $600. It's $570 less per month. But think about that. You're going to get $1,330 a month for 12 months at age 62, 63, 64, 65, 66 for 5 years before you would ever collect a dime in full retirement. Now, you can do the math, and you'd have to guess how long you're going to live to get the break-even point. Unless you know when you're going to die, to me, it's an exercise in a little bit of futility. Now, you may not agree with me. That's okay. You don't need to agree with me. let's say I wait a couple of years later, I wait until I'm 65. It's instead of 1330, it's 1690, 1690. That's a lot closer to 1900, but I'm waiting 3 more years to retire. There's another catch. Here's the catch. So you're going to say, I'm going to keep working why don't I just take Social Security at 62 and then just keep working and just put all that retirement money into savings? If you're taking early Social Security before full retirement age, like at 62, 63, 64, 65, or 66, you are subject to what they call the earnings limit. And that changes every year. But this year, in 2025, it's about $23,000 in earned income, right? If you make more than that, I think for every $2 that you earn over that limit, you need to report that, or they will catch you on the back end. It won't be good. They will deduct $1 for every $2 you earn over the limit. Now, you don't really lose that money because that goes back into your calculation. It'll come back to you, not in a lump sum, but over time when you reach full retirement age. So it's not money you absolutely lose. Okay. So we know we don't lose the money, but it's pretty inconvenient, don't you think? So as long as you're earning under 23,000, and that bumps up every year. I think when I started it was 18, and it just slowly bumped up over a few years. As long as you have earned income at or under that amount, you're fine. The next thing is what counts. It's only earned income. What's earned income? That's wages you earn from a job. What doesn't count against that, and this is important to know, especially if you get any kind of pension, that does not count. You can get $50,000 a year in a pension, and it does not count against your Social Security. What else doesn't count? Investment income. If you have 401k income or any investment income, you can have as much as you want. It's not earned income. It does not count against the earnings limit. Good to know. So the last thing is, let's say you think you can make it to 67 and you're going to get the full $1,900. Let's say I can wait longer. I can continue to work at my job for another 3 years or 2 years. If you can make it past that, every year past 67, your projected benefit going forward will bump up 8%. Meaning, for this $1,900, if you forego that, delay it until age 70, that $1,900 turns into $2,350 a month. So let's compare what you're going to get at age 62, $1,330. Yet if you waited till 70, you get $2,315, over $1,000 a month more. But you got to wait 8 years for it. So think about the fact that it sounds like a lot of money, but think about the fact that you're going 8 years with nothing coming in from Social Security, and then you're getting this big amount. And I've heard people say things like, that sounds like a really good deal. Unless I die at 69, then I don't get anything. It's tough. So anyway, that is basic Social Security. Now, there are all sorts of rules having to do with current spouses, former spouses, all sorts of nuances that you need to get the detailed information from somebody else, a professional, not some full-time RV retired dude like me that knows a little about a lot. Okay? And that's what this is an example of. And I'm very confident about the information I've given you, but I've given you the part that you see above the waterline, the tip of the iceberg. There's more below it. So if you're going to participate in it, do your diligence to get more information, which brings us to Medicare. Who doesn't love Medicare? This is what I thought long before I retired. When I get Medicare, they'll pay for everything. And it's free. Because I've been paying in Medicare my whole life. Both those things are wrong. It's not free. Right now, if you, let's say, like me, you're getting at 65, I was already getting Social Security because I filed at 62. Starting at 65, you automatically qualify for Medicare, and you can sign up for a month ahead, X number of months. I don't remember what they are. You can look it up. You can find out. But to the day, I signed up ahead of time. So I was ready to go. And the month you turn 65, the first of that month, your Medicare kicks in. You get your card, you have Medicare coverage, and they'll very kindly take $185 out of your Social Security check each and every month. It's not free. It's $185. And that's okay as long as they pay for everything, which they don't. So there's a couple things that you need to worry about with just straight Medicare. That is, there's two parts. There's Part A and Part B. Part A is hospitalization. Part B is like basically everything else. And there's a deductible. The good news, it's a small deductible on Part B. It's like somewhere around, I think it's $255 this year. But guess what? There's co-insurance payments. What the heck is co-insurance? It means they bill you for something and you have to pay co-insurance at a rate of 20%. So let's say you have a procedure that costs $10,000, your share of it's going to be $2,000. I'm like, I thought Medicare paid for everything. Medicare does not pay for everything. I would say it's a myth. It was a misconception on my part with no good reason. So what can you do about that? There's a couple of things, right? There, you will see advertised on TV and online what they call Medicare Advantage plans at zero cost to you, and you get all these extra benefits, and they tell you all these things that you're getting for free. All you have to do is sign up with United Healthcare or Blue Cross, whatever insurance company is peddling their Medicare Advantage plan, and it'll cost you $0 per month. And they'll do things like, we'll take care of that co-insurance thing. We'll give you dental care. We'll give you eyeglass care. We'll give you gym membership, and everything will be just great. Okay? It's possible that it will, but I started doing my research when I went, no company, insurance companies are in this to make money. They're for-profit companies. So anytime a company is going to give you something for $0, you need to look into it because there's something you're missing. And I was on a mission to find out, what am I missing in this case? And what I was missing was what this whole thing really is the federal government, Medicare, saying to insurance companies, look, if you will take over Medicare for an individual, we will pay you a flat sum every single year you cover that individual. Say an average of $15,000 per person per year. So take me. You're going to say, if you take over the health insurance needs of Rob under the Medicare guidelines, we will give you $15,000 a year. And the insurance company is going to go, well, that's pretty good. If I get a nice, healthy group of people, and if Rob's healthy, I can collect $15,000. And if he doesn't need any procedures or he only goes to the doctor once a year, I'm going to make some bank. I'm going to make some good money. Plus, I'll be able to establish my own guidelines on what procedures that I approve. And I'm going to do my own claims adjustment, meaning instead of Medicare is out of it when you go to an Advantage plan, and it goes to the insurance company. Now, what I don't know is I know there's certain guidelines they must follow. I don't know exactly what there are, but I do know they have flexibility in requiring pre-approval for things that Medicare doesn't require pre-approval for. And in 99 times out of 100 on Medicare, if your doctor says you need it, you're going to get paid. It's good. it's gonna work just fine. But with an Advantage plan, they can say, we need the doctor to jump through these hoops before we'll approve this. We may not pre-approve it. And you may do something and we may decline the claim, and you may be responsible for it, and you may have to. Now, the truth is, while the rates of declined claims are much higher for Advantage plans than they are for Medicare, it's not quite as bad as it is on the surface, because if you go through the appeal process, you will often get approved at the end of the day. But it's very stressful to go through that process. I know that it is. And the other thing is, if I have regular Medicare, I can go anywhere in the country to any provider that accepts Medicare. With an Advantage plan, I have some limitations. I could have an HMO Medicare Advantage plan where I need to be within their network, within your geographic area, right? These Advantage plans are written on a per state basis. So if I get an Advantage plan in Nevada, I may have to meet, other than my emergency needs, I may have to get all my stuff done in Nevada in their network. Otherwise, they won't cover things outside the network. They won't cover them fully. Again, you'll be paying out of pocket. So it's important to know what the limitations are for an Advantage plan. The advantages of an Advantage plan, cleverly named product, isn't it? Is it often is $0 per month. And in addition to that, they cover some portion of your medications. And that is the other trickster from Medicare. Medicare they don't cover any medications. Who'd have thought that? They don't. But a Medicare Advantage plan does cover medications, and it depends on the plan and how much they cover and what medications they cover and what requirements they have, what medications they'll approve. You need to find out ahead of time. And the best way to find out about each Advantage plan in your area is to find a trusted health insurance broker that has relationships with these companies and they know which ones do what. So that is Advantage. Now, let's say I don't get an Advantage plan. What are my other options? Your other options are, they call them Medigap plans, where what I told you that Medicare doesn't pay, we call that the gap in coverage. Medigap plans close that gap and pay that for you, but you'll have another monthly cost. It's not free. The gold standard one is a Plan G, which covers everything under the sun except for medications and that small $250 deductible on Plan B. But all the coinsurance, everything else is covered, and everything goes through Medicare. It isn't, the administration of it may be contracted through an insurance company, but the actual processing of claims and the decision making remains with Medicare. So you have free reign through the whole country, any Medicare provider, and they're not going to be playing games with your pre-approvals and declining claims because they don't have the ability there. All they do is they get paid a small amount to do the processing for your Medigap plan. But it still does not cover medications. So if you don't have an Advantage plan, you have regular Medicare, then you get one of these Medigap plans, and they're anywhere from, say, $70 to $150 a month, depending on which Medigap plan you get. And the lower cost ones are going to cover less. The higher cost ones, like the Plan Gs, the gold standard, pays everything. In my state, for me, it was over $150 a month. I also, because I don't have an Advantage plan, have to buy a separate policy for my medications. And I happen to, they can be very low cost if you're not on any expensive medications. sorry to say, for me, I'm on a very high cost medication. I'm on a particular medication that's over $1,100 a month. So I'm having to pay $85 a month for my separate policy just to pay for medications. If I didn't have that expensive thing, I could get away with 10, 20, sometimes $30 a month. I've seen them for $5 a month. But you need to understand the lower the premium, the less things they're going to cover, and the harder it is to get more expensive medications. There's so much more detail and rules and nuances to Medicare, but I'm giving you the very basics here. So you'll at least know enough when you talk to a professional or do your research, you'll know enough to ask some intelligent questions. I hope this has been a help to you, and let me know in the comments if you liked it. Take care, and I'll see you tomorrow or see you down the road.